everybody's doing well. We'll wait here for a couple minutes, let some more people join in. We got a good group in here already. It's awesome. Put down in the chat where you guys are coming from. It's always interesting seeing where you all are tuning in from. I know we have sometimes a couple Canadians and across the west coast of the US. That's always pretty cool to see. I'm based out of Charlotte, North Carolina. It's a rainy, cloudy day today here in Charlotte, but a good day for a webinar. So glad we could hop on with you all today. For those who don't know me, my name is Eric Fitzgerald. I head up PassiveInvesting.com's acquisitions platform. So my experience is kind of started in property management, worked for a company called Morgan Properties originally, and then also worked in student housing property management. Moved down here to Charlotte about 2.5 years ago. Started out as actually 3 years ago. Started out as an analyst for a multifamily firm here in Charlotte. And then moved into an acquisitions associate role for a family office. They were based out of Chicago and New York. And I was facilitating our North and South Carolina acquisitions, doing mostly C and B class value add. I had met the guys at Passive when I first moved down here, actually through the MFIN platform. So went and had lunch with Dan and got to know them a little bit. And the timing lined up where I had a good amount of experience and they were looking to build out their acquisitions platform. So I've been with the company for about almost 2 years now. Like I said, I head up all of our investment activity, multifamily, car wash, hotels. So I love what I do. I love our team. We have a team of 5 now on the acquisitions team, and that's been super awesome to see that grow. And that's actually kind of a little bit about what we're going to be talking today as far as growing out your team for your own, multifamily syndication company. And it's a really good topic because I've seen this company grow from, 5 or 10 employees to now over 30. Seeing the different departments get built out, seeing how the partners kind of stay in their own lanes and stay, kind of doing what they're good at, but also get feedback from the other partners. So it's been a really good learning experience for myself. And hopefully I can share some of those lessons that I've learned, helping this company scale and grow to try to help you all out when you're looking to maybe start your own syndication company and how you structure that and what the partnership looks like and all that kind of stuff. I'm going to pull up the webinar webpage here. Screen. Actually, it's not letting me share my screen. So I'll just go over the few bullet points we're going to talk about here. So we're going to be talking about building out your own apartment syndication team. Basically kind of determining the essentials of your role, your strengths and weaknesses, how you can kind of use your network to build out your team as far as other partners, your team members, and how you can kind of evaluate your own strengths and weaknesses to build a successful company. So I want this to be, pretty engaging and active. So anybody, if you have any questions about your specific situation, I'll try to answer those. But like I said, I'll try to talk about how, PassiveInvesting.com has grown. I've also done, multifamily investments as a GP on the side for myself and, with other partners. So I have some of that experience as well, seeing how different partnerships work and don't work. So should be able to hopefully, shed some light on how that all works. So, I'll speak specifically about what most people start with. They'll start with finding people that are most like them. So they go to a conference, they'll meet somebody, they get along super well. They're good on the same stuff. And, that actually ends up not being the best. Yeah, we have some questions in the chat here. Let me just stop and make sure we're keeping track of all these. Is this recorded? Yes, this is recorded. What is a minimum to start one? I'm not sure exactly what that means. All right, awesome. Hannah's taking care of the questions in there. Um, so I was saying, most people will go to a conference, they'll find somebody that is, like them and that they enjoy, being around, which is important, but they'll end up finding somebody that's good at underwriting when they're already good at, underwriting, or someone that has a really strong, capital raising type of personality when they already have that and they just get along with them super well. So that's where you can kind of run into some issues. You want to find people with different skill sets. So one thing that, the partners at PassiveInvesting.com are really good at is, Danny's very good at, financials, debt, finance, asset management, that kind of stuff. Dan is very good at, getting on webinars like these and building out, marketing and the brand and, going and speaking at conferences and building awareness of the brand. So that's what he's really good at. So Danny doesn't do a whole lot of that, and Dan doesn't do a whole lot of finance stuff for the company, because that's what Danny's really good at. Brandon's really good at acquisitions, and he's has a construction background. So any renovations, he's super in the know. We're developing some car washes right now. He's been through the development process before, so he's really good at that. So Dan doesn't worry about the permitting on a car wash deal because Brandon and the acquisitions team are handling that kind of stuff. So that's been one thing, a really important lesson learned from seeing this company grow and being a part of that scaling is they stay in their own lanes. There still is a good amount of gray area there. They do sometimes give advice or give their feedback on important decisions in another department, but I think if all three of them were good at capital raising, this company would not be nearly where it is today. The same thing goes for if all three of them were good at underwriting, we wouldn't be where we were, where we are today. So I think that's one of the biggest lessons learned, is just, find people with different skill sets. Don't, gravitate to the person that, you just get along with really well because they like the same stuff that you do. You can talk about numbers and talk about deals with them. It's a nice connection to have, but I think the biggest thing is just making sure that they have different skill sets. So that's been a really, important lesson. As far as my own, personal experience on the general partnership side and multifamily, a big important aspect is having the same goals as far as, where you're going. I did a 12 unit here in Charlotte, and, we all had the same goal. We wanted to basically, we bought this deal off market, for an awesome basis. We sunk $30,000-$40,000 a door, interior and exterior, into the deal. We refinanced it, and then we put long-term debt on it, and it's basically a long-term hold. I did actually end up selling out of that deal just because it made sense to invest passively at the point of my career that I was in. But it was important we all had the same goals, so there was no question of, wow, we just created all this equity in this deal, let's just sell it and get a big fat check and move on with our days. Everybody kind of had the same feeling as far as this was a long-term investment, and it was kind of a buy and hold. So that would be another thing when you're kind of looking at partners and looking at important decisions like those. You want to be upfront with your goals and basically what you want to accomplish in the business with your partners, and make sure that that's you're all on the same page there. I will say, and if there are any questions, like I said, about your specific situation, starting your own, syndication company, what you're good at, who you might need, I've found that at PassiveInvesting.com, the 3 partners, I think 3 is a great number, just because, basically there's one for finance and asset management / debt. There's one for capital raising, marketing, investor relations, that would be Dan. And then there's one for, acquisitions, renovations, capital projects, and that would be Brandon. So I've seen that work super, super well at our company. You can certainly do it with 2 partners. You can do it with 4 partners. I'd say you probably don't need more than 4 at any. I can't think of a situation where you would really need more than 4 partners. But, that's just kind of how I've seen it work here at Passive. And on my 12 unit, that was, myself and 2 other partners with similar, skill sets to the 3 partners here at Passive. So I've seen 3 work really well. I've seen 2 work really well. There are people that go on it kind of lone wolf style and make it work that way. I do think it's a little bit of a scarcity mindset sometimes because, maybe you want all the equity and you want all the income that the business is going to generate. But, with a company like PassiveInvesting.com, we have $1 billion assets under management. Could you make the argument that one person could go and do, $350 million of asset under management? I would say that would be a lot harder than doing it with 2 other people that are really good at other skill sets and just growing that to be $1 billion company. So, that's just what I've seen from my experience. And I think it's, you're selling yourself short by not discussing even the idea of partners and, teaming up with people that are good at different skill sets and growing together that way and making sure you're all kind of working towards the same goal. So outside of kind of the partnership, once you kind of figure out your partnership, this has been a really good experience with Passive, seeing the different departments be built out, what the kind of main roles and responsibilities and the important team members would be. Will this recording be made available to us? Yes, it will. Hannah will send out the link for that. And then are you able to repeat the job description for the 3 partners? Sure. So we have Danny Randazzo. He is kind of overseeing our finance, asset management, capital markets. So really the numbers, the loans, asset management, that's his kind of lane that he stays in. And now, we're at a point he has under him a director of asset management, Brian Bornhorst, and a director of capital markets, Ed Gilmer, and then a director of finance, Tal Brody, and they have their own, departments. So, we're kind of at that point where it's been built out, to the point where we have now directors of all of the different, kind of responsibilities of the partners. Now the partner's job is just kind of overseeing those directors and making sure that, the goals are being met and we're all kind of moving in the same direction. So that would be Danny's role. Dan's role is marketing, investor relations, investor services. So again, he has a director of investor relations, a director of marketing. We have a great team, on that side of things. And basically now his job is to kind of oversee those departments, make sure, again, we're all moving in the same direction. So I will say, getting started, obviously you won't have those large teams, so you will be doing it yourself. So in the beginning, Dan was hosting all the webinars. He was, hosting all the meetups. I actually went to an in-person meetup in Charlotte back in 2019 that Dan was doing, before the company was anywhere near where it is today. So, you're definitely doing a lot of that yourself, which I think helps when you go to hire people and train them, because you know how the job needs to be done. So it's a really important aspect of our company, and that's kind of Dan's responsibilities. The third would be Brandon Abbott. So he oversees my team. So I head up our acquisitions. Brandon started out with the company heading up the acquisitions. So, all the broker relations, all the kind of upfront underwriting and negotiating and bidding process, and, working with Danny on the financial side with the loans and the asset management. So Brandon kind of oversees that department, as well as the, renovation side. Now, typically we buy more Class A properties now. We did not start out that way. We started out buying, C-class deals in Greenville, South Carolina, back in 2018. So, he kind of oversaw a lot of those renovations. He was, sometimes on the property with his tools, getting stuff done. So it's always cool to hear those types of stories about, getting started and what the team looks like now. So those are the general kind of job descriptions for the 3 partners. And again, it doesn't have to be exactly that way. You can have one person do finance and acquisitions and asset management, and then another person do capital raising, marketing, investor relations, all that kind of stuff. But I typically have seen with comparable companies to ours, 2 to 3 partners is a good number. Sometimes maybe 4, but anything above 4 is probably getting a little bit too much. And anytime I see, a company with one partner, even as a passive investor myself, I'm not super comfortable with, all of my capital being dependent on one person's performance. Because, seeing the inside of a business like this, it would be very, very hard for one person to do all of these responsibilities well. Especially at, a scalable level. I think you can do it for a certain amount of time and a certain amount of deals, but eventually I think to scale, you need to kind of bring on partners and bring on team members that can handle the load and make sure the quality is still there. So yeah, thank you for that question. Is there a contact number, email address to reach acquisition team? Yes, I will put my my email down in the chat here, and you can reach out if you'd like. Yep, thank you, Hannah. So let's see. I mean, really, that's the way the partners are kind of running things. The situation we're at now, like I said, we have directors of all the different departments now, and like I said, we have 5 people on my acquisitions team. So there's another certain level of growth that happens, there after the partners are set up, then the directors are set up, and then you start kind of filling in the important roles and responsibilities. And Hannah just sent a link in there to our Meet the Team page, where you can see that all 30 of our smiling faces on the website there. But yeah, it's been really cool. It's been really cool to see the team grow and watch the responsibilities and the quality be kind of passed down. And we're building out systems and processes. We're doing a bunch of demos on deal tracking CRM right now to make sure that all of our files and all of our underwriting are in the right spots. And we know when all the deal CFO dates are due. We know all the deals that we have in due diligence or in closing, what specific tasks need to be done by who and when. So I love that kind of stuff, building out the systems. That's, a big part of my day-to-day now, especially for the acquisitions team. Just making sure we're keeping the quality, as well as the quantity of deals that we've been doing, has been a big focus for us. So yeah, I think I touched on pretty much everything I wanted to touch on here. The main kind of points being, don't go to a conference, meet somebody that you really like, and can talk about numbers too, because they're also good at what you do. So it's a really important kind of part of this. I do see a question in the Q&A here. Sorry, I missed that, Jonathan. Hi, Eric. What would be a red flag, green flag for a potential partner? So many times the people who have the skills we need are not people we actually know at a personal level. How do you know they're trustworthy? Or does a smart partner set up the legalities of their partnership so tight that the dishonesty and competence will not be as costly? That is a great question. And if I knew the answer to it, I would be a billionaire. No. Yeah, that's a great question. I think, one thing I know that the 3 partners here at Passive did was actually go on a retreat, and they took their wives. I'm not sure if they took their kids or not, but I know they took their wives, and they basically spent, I think, a week, with each other, somewhere at a beach or a cabin or somewhere, and just got to know each other, and basically, wrote out, a plan of what they looked to accomplish with the company. Made sure they were all going to the same place. So like if Danny wanted to get to, $200 million asset under management, have a good amount of passive income coming in, and then he wanted to go to Aruba and, live in an RV by the beach, that would not be in line with what maybe Dan or Brandon wanted to accomplish. So I think that's one big thing. Another big thing, speaking specifically from the passive side, is Brandon and Dan went to church together and knew each other for a long time. So that kind of trustworthiness was already built in there. And then Dan and Brandon met Danny through a similar mentor, a mentor that they all had. And so they had the reference of that mentor to say, yeah, Danny's a good guy. He's looking to do this. He's trustworthy. You can partner up with him with no issue on my end. So I think that was important to have a reference for that person. But yeah, I think not jumping in bed with somebody after the first meeting, even if, like I said, they have the skill set that you need. Just making sure that you know them at a personal level, and taking the effort to do that before you go in. And also, you can date them, so you can do like one deal with them and not worry about setting up a corporate structure and a website and all this crazy stuff. Like, just go do a deal with them, and see how the process goes, because you learn a lot about people during the hard times. And when COVID happens and you're under contract on a deal and everybody kind of shows their true colors under pressure. I think that's one of the best ways of figuring out who somebody really is and how they operate is just doing a deal with them. I wouldn't go after $100 million deal. Maybe it's a 20 unit that you do JV with just, your capital and their capital. Maybe you raise, a little bit of funds from family and friends. But I hope I answered that question well enough. I know that's like the biggest question is, partnerships go wrong all the time. And I'm sure a lot of people at the start of partnerships thought that, they were a great fit for each other, and then it just didn't work out. So I hope, the experience seeing passive the way they are helps with that answer. And then as well as some of the things I've seen on the GP side as well. We have a question from Maurice Alexander. Do you recommend all partners live in the same market? Does this change if you are investing in different markets? I would say it depends on what your goals are. So if you're looking to invest in one market to start out with, so say, the Charlotte MSA, you're going to be the master of the Charlotte MSA for your first 5 to 10 deals and just kind of build out your portfolio there. It's certainly helpful to have all partners live in the same market. Us as a company, Danny lives in Charleston, South Carolina. Dan and Brandon both live in Columbia, South Carolina. So I will say it is helpful having everybody relatively close, especially when they were starting out. I know, going to meet with brokers and going to, property tours, it was always helpful to have everybody relatively close to go do that together and kind of, get the business up and running. It's certainly not necessary. But I would say all other things being equal, it would be easier to have everybody, in the same market. But, like I said, our company is fully remote. And I think as long as your partners and your employees are self-motivated and everybody's, doesn't need to be micromanaged, I think that's a great, solution to, save some money on an office and, not have to incur a bunch of moving expenses and all that kind of stuff. So yeah, it would be nice in an ideal world to live in the same market if you're looking to invest in that same market. And then your second part of your question is, does this change if you're investing in different markets? I would say then it's even less important for everybody to be in the same area. If you live in New York City and you're investing in Texas, you don't need everybody to live in New York City. It would be ideal to have somebody live in Texas. So that's kind of the answer there. Sure. So any other questions? Like I said, the main thing is just, trying to find people with different skill sets than yourself. A lot of the conferences are great places to meet people like that. We have a conference that we put on yearly here in Charlotte. The next one is, I believe, in June. Hannah's going to yell at me for getting that date wrong if it is. But she should be able to send out the information for that conference coming up. So yeah, in-person conferences are a great place to meet people. The MFIN platform is actually where I met my partners on the 12 unit. It's also where I met Dan, Danny, and Brandon. So, platforms like those are great places to get your name out there, get your face out there, and you you all are already doing that by being on these types of webinars and learning about this stuff. So you're ahead of the vast majority of people already. So yeah, if there are no other questions, we'll wrap this up here in a minute or two. Thank you all for hopping on. I hope this was helpful. And like I said, I have my email in the chat there if anyone needs to reach out. And Hannah will be sending this recording out for tomorrow morning. So thank you, everybody. Have a great Tuesday, and we'll see y'all soon. Thank you.